Apple posted another large beat and implied a rise versus the June revenue expectations. Our original view that the iPhone cycle would disappoint in the midst of coronavirus was clearly wrong, not Goldman Sachs admitting they were wrong, my goodness. Not only has Apple done better than we expected on iPhones, but Mac and iPad have also materially outperformed our forecasts. iPad demand is so strong that the company believes that we will leave $3 to $4 billion of revenue on the table in Q3. So in other words, they can't satisfy the upside potential for the iPad. With this kind of demand backlog and a very difficult reopening forecasting environment, we are moving to the sidelines here. Since we added Apple to the Americas sell list, the shares are up 86% versus the S&P 500, up 49%. Our forecasts move up to match the beat and June revenue indications and are now closer to consensus. While we continue to believe that current levels of demand are likely to be tough to sustain, we equally acknowledge that high-end consumers have proven far more resilient through the pandemic than we expected. Our 12-month target moves to $130, and that's obviously their view, and that's what Mike was saying about the government, giving cash out for people to spend on your schools, education authorities, and the like, buying everybody laptops, buying everybody iPhones, buying everybody whatever they want, and spending all the cash on these types of products. So obviously Apple, one of the huge beneficiaries of that process, not unsurprisingly, obviously a huge supporter of the massive spending spree, just like an awful lot of the tech companies, massive supporters of the huge spending spree to try and get that money out of the system into their own balance sheets, and that's what they've obviously managed to do. So the big boys have been very, very successful in achieving that objective of getting the money out of the system into their own balance sheets. A lot of smaller businesses have not been quite so successful in getting access to that cash, and obviously it's about that circulation of cash. If it just goes into huge balance sheets and that enables these big companies to do buybacks, for example, then it's not benefiting anybody whatsoever, except for the shareholders of that one company. So it's an awkward, difficult one to get your head around. But obviously it's something that if you start to think about it, you start to understand it, it starts to make a little bit more sense, the overall shape of it. So we're often running on the S&P. We were right about the gap up. We were talking about that earlier on today regarding the bullishness of the various things we were talking about yesterday, the skew, for example, and the like. And we've opened gap up, and so far, obviously, equities managed to put a little pop into the markets there and drove higher, but obviously very, very difficult to sustain that speed of move higher. Sellers came straight back in against that, pushed the price straight back down again. The trade, don't know if anybody saw the trade, but the trade was a very strong buy trade opportunity on the Qs, just literally into the just before the cash open really started to kick off, and just literally at the opening bell, the Q was a very, very strong buyable opportunity. Did anybody see it? Did anybody trade it? There was a brilliant opportunity to get the Qs on the book. You'll see it from the Qs chart just here. So there's the buyable opportunity right there. You can see obviously we've got an awful lot of value in here, and the Qs had two opportunities to buy just here, but I'd like that one to have been lower low. There was another opportunity here which was a lower low, and that was again another buyable opportunity just there. So this buy, and then this buy on the Qs, three good opportunities to get long the Qs for the pop higher. And obviously pre the open, those trades, that buy trade didn't go anywhere. This buy trade had a very, very strong pop to the upside within 2 or 3, literally within a minute or two. And then this buy here obviously had that very, very strong surge to the upside. It looked as if it should have done better than it did, because obviously the blue line did not spike, and that suggests that the market was kind of balanced at that stage. And obviously, because the ABCs did not improve, the equity market says, well, we've gone too far too fast. And a great opportunity just to close out some of that trade and walk away from it for the time being, guys. So one trade since the cash open. One trade since the cash open, guys, at this point. Not very much else we can add to that picture. And so far, so good. So far, so good, guys. Ian's on board with the last buy. Good stuff. Yep, it was a good looking trade, Gene. You know, these are the trades. If you remember yesterday, we talked about the trade that developed at 12 noon. There was a similar trade again today at 12 noon for anybody that was involved in that conversation yesterday when we were looking at the NASDAQ's relationship to the auction processes that we get each day, the 8 o'clock auction, the 7 o'clock auction, the 9 o'clocks, the 10 o'clocks, the 11 o'clocks, the 12 o'clocks, the hourlies, the end of the top of the hour type auctions, the 12 o'clock being the most important, of course. And there was a great opportunity to buy some cues at 12 o'clock for that auction, and it did very, very well. Thank you very much. Very well. Top edge oil, still working, Sam. I don't know why it's still working. There was an opportunity to sell back in, but we lost the value again as it broke down into the low prices. So I am quite happy to be a delighted receiver of that extra bit of profit. So we got the pullback here. And we've now seen the sell developing to the downside here. But just on this candle here, I was a little bit surprised that we actually got that breakout, to be honest. So I quite like the story, but I'm not convinced that we've got a lot more downside at this point against that demand that's still showing up here. So that's why I'm quite keen to just take some more money out of the trade, perhaps more than I would have normally have expected to take out at this point. Still, it's worked out quite good. If anybody joined me in at the 40s, we've finally got down to zero, so that's about a $400 profit for myself and Sam. If anybody else was with me on the trade, I like your style. I like your style. Kind of. If anybody had been trading the Qs, you already knew that there was a huge block of trade levels below us here, guys, on the Qs. And that's the price we've bounced right off of for anybody that was interested or anybody that takes a note of these trade levels. Then you're obviously already aware that from the tweets, you're already aware that we have this very large strike area, loads of strikes of different sorts and sizes across different markets into that price area just there. And obviously we've seen that very, very positive buy-side bounce off of that area. Remember, this area was posted before the cash open started, guys. So it's not something that you guys are not aware of. You saw it here from the tweet from 12:30 this afternoon. You saw this block area down here. You saw where it was. You could obviously understand it. You can see that's what that area is. You can see it's gone buy-side bounce twice. And you can obviously see the idea of the location of this area is full of gammas. And that becomes sticky. If the price goes through it and tests it, and there's no buyers, it becomes slippy. So it's sticky on the way down, it's slippy through the level, and it's sticky on the way back up again. So you've always got to remember, if it approaches from above, it's sticky. If it goes through and it comes back up, it's sticky. If it goes through it, it's slippy. So we start watching for those areas in terms of the effect they have on the speed and velocity of price. And that's exactly what we showed you in earlier charts here. You can see that buy-side bounce just came right off of that price print. The stickies and the slippies, very, very important concepts, guys. Let's go into the cash. Open, ready to rock and roll. I'm a little bit disappointed I didn't get more out of my bond trade. I was hoping to get a better price, so I did actually only have very small trade on this one. It was a buy bottom edge for me. I'm a little bit disappointed that that trade never made more, because obviously we never got much size on the deal because somebody started to front run the damn thing at 11s, 12s, and it stopped us getting the liquidity at 8s, 9s. And that was really disappointing because there was a lot of liquidity we felt in terms of stops and various other sellers willing to pay 8s and 9s in this area. So there was a lot of selling in here that we could have got some really good size against that seller coming in just below here. Unfortunately, there was too many buyers came in at 12s, and it just ruined it. So it's popped the price off the 12s, and because of that, we've only got very, very, very small size on this deal, and it's made us absolutely nothing, basically. So it's went from 12s up to a high price of 21s. Enough for a triple macchiato, and that's about it. That's about it. So disappointed, but we can obviously just not be too bothered about bonds until we start seeing some liquidity again. We'll see how it develops. All